As of November 25, 2025, the digital asset world is a storm of opportunity and uncertainty. Every day, headlines shift with the winds of global events, regulations, and technological breakthroughs, making the landscape more unpredictable than ever before. Investors and enthusiasts alike are constantly searching for the next big thing, while established giants like Bitcoin and Ethereum continue to dominate the conversation. While Bitcoin dominates headlines, Pi Network quietly builds its foundation, trading at around 24 cents. Unlike the dramatic price swings of other cryptocurrencies, Pi's value remains relatively stable, reflecting its early stage and the unique approach its team has taken. The project's low-key presence belies the significant groundwork being laid behind the scenes. Pi's story isn't about overnight riches, it's about slow, steady growth and a massive global user base. With millions of users spanning continents, Pi Network is building a community that values participation and collaboration over speculation. This grassroots movement is what sets Pi apart from many other digital currencies that focus solely on price action. Its mobile mining and focus on accessibility aim to democratize crypto, prioritizing network strength over price speculation. By allowing anyone with a smartphone to participate, Pi opens the door to people in regions often left out of the crypto revolution. This inclusive approach could be a game-changer, especially for those in developing economies seeking new financial opportunities. Pi's enclosed mainnet phase, though controversial, is a strategic move to ensure security and sustainability before open market access. The team is focused on building robust infrastructure, ironing out technical challenges, and protecting users from potential threats. This cautious approach may frustrate some, but it demonstrates a commitment to long-term stability over short-term hype. The real test will come when Pi finally opens to the global market, a moment its community eagerly awaits. Anticipation is building, with users speculating about the impact Pi could have once it's freely traded. Will it live up to the promise of a truly accessible digital currency, or face the same challenges as its predecessors? For Pi, it's not about today's price, but the long-term vision of a peer-to-peer digital economy. The journey is just beginning, and the world is watching to see if Pi Network can transform ambition into reality, forging a new path in the ever-evolving world of cryptocurrency. To truly understand the environment surrounding Pi and other emerging cryptocurrencies, it's essential to first look at Bitcoin, the original and most influential digital asset. Bitcoin acts as the anchor of the entire crypto market, setting the pace and tone for everything that follows. Its movements ripple across the sector, impacting investor sentiment and shaping the strategies of countless projects. Recently, Bitcoin's dominance has been tested. After reaching a remarkable high of $124,000, its price tumbled to $87,200, a sharp 13% decline in just 1 week. This dramatic drop sent shockwaves through the market, leaving both seasoned investors and newcomers on edge, and sparking debates about the future direction of digital assets. Such volatility is nothing new for Bitcoin. It's a hallmark of its history, with wild price swings that can create both opportunities and risks. Technical indicators now paint a mixed picture. Some suggest Bitcoin is undervalued and poised for a rebound, while others warn of further downside and heightened risk. The $82,000 support level has become a critical line in the sand. If Bitcoin's price falls below this threshold, it could trigger a cascade of selling, leading to a deeper downturn that would affect not just Bitcoin, but the entire digital asset market. Investors are watching this level closely, knowing its importance. Adding to the uncertainty, high inflation and rising interest rates are putting extra pressure on the market. For institutional investors, non-yielding assets like Bitcoin become less attractive compared to traditional investments that offer steady returns, further dampening demand. As a result, the overall market mood has shifted dramatically. What was once a climate of euphoria and rapid growth has turned into one of caution and careful analysis. Bitcoin's recent struggles have created significant headwinds, especially for smaller and newer projects like Pi, which rely on positive market sentiment to gain traction. In this challenging environment, every crypto project, including Pi, must find ways to adapt and navigate the uncertainty. Teams are rethinking their strategies, focusing on resilience, and preparing for whatever comes next. Ultimately, Bitcoin's fate continues to set the tone for the entire digital asset ecosystem. Its journey, with all its ups and downs, remains the key reference point for the future of crypto. I see Bitcoin's volatility as a sign of strength, not weakness. These price swings offer disciplined investors a chance to accumulate a superior asset at a discount. At MicroStrategy, we don't trade. We accumulate and hold Bitcoin as a long-term treasury reserve. Short-term price noise is irrelevant. Bitcoin is engineered to be the ultimate store of value. Every dip is an opportunity to convert weaker assets into something stronger. History shows that conviction and patience win in the end. Focus on fundamentals, not daily price moves. Panic is the enemy. Conviction and understanding are the keys to building generational wealth. MicroStrategy's commitment to Bitcoin is clear. We've just added over 8,000 BTC, bringing our total to nearly 650,000. This isn't a small bet, it's a transformation of our corporate treasury. While our Bitcoin holdings show big gains, our stock has dropped sharply, reflecting market skepticism about our leveraged approach. Critics warn of risks, but our finances are structured to withstand downturns. We're not forced sellers, we're long-term buyers, even as others in the industry falter. We've adjusted our rules to keep acquiring Bitcoin, giving shareholders direct exposure to this revolutionary asset. Our mission: accumulate as much Bitcoin as possible for our investors. MicroStrategy now faces a new and significant threat: potential delisting from major equity indices such as NASDAQ and MSCI. These indices are not just symbols of prestige, they are critical gateways to the world's largest pools of capital. Being included in them means access to billions in passive investment, while exclusion can have far-reaching consequences for a company's liquidity and reputation. If MicroStrategy is excluded, passive funds that track these indices could be forced to sell their shares, triggering billions of dollars in outflows. This would likely lead to increased volatility in our stock price, as large volumes are dumped onto the market in a short period. The ripple effects could extend beyond our company, impacting investor confidence and the broader perception of companies with significant digital asset holdings. While some market participants see this as a looming crisis, I view it differently. To me, this is a distraction from our core value proposition, our substantial Bitcoin holdings, and our commitment to a Bitcoin-centric strategy. The noise around index exclusion doesn't change the fundamentals of what we own or our long-term vision. Investors who are truly seeking exposure to Bitcoin will continue to find us, regardless of whether we are included in a particular index. Our unique position as a publicly traded company with significant Bitcoin reserves makes us a natural choice for those looking to bridge traditional finance and the digital asset world. The old financial system is struggling to classify and understand us, but that's because we're pioneering a new model, one that challenges conventional definitions of a public company. We're not just a tech firm or a holding company, we're at the forefront of a financial revolution. Still, we can't ignore the reality that the threat of exclusion has already hurt our stock price and created a sense of uncertainty among investors. The market often reacts to headlines and short-term risks, even when the underlying fundamentals remain strong. This ongoing conflict between innovation and tradition is more than just a company story. It's a test case that will set a precedent for other firms considering a Bitcoin standard. The decisions made here will influence how future innovators are treated by the financial establishment. Ultimately, the outcome of this situation will help shape the future landscape for digital asset firms in traditional finance, determining whether they are welcomed, sidelined, or forced to create entirely new paths forward. While MicroStrategy battles Wall Street, Pi Network is quietly building legitimacy. Its move toward compliance with the EU's MiCA regulation is a smart, forward-thinking step. Pi's focus is on legal foundations, not hype, prioritizing KYC, compliance, and ecosystem development. This patient, regulatory-first approach could give Pi a major advantage in Europe and beyond. Instead of chasing speculative gains, Pi is investing in long-term trust and utility. When regulatory clarity arrives, projects like Pi that built on compliance will be best positioned to thrive. Today's quiet groundwork could make Pi a trusted digital currency tomorrow. Bitcoin's fate shapes the entire crypto landscape, including Pi Network. When Bitcoin booms, excitement and capital flow into projects like Pi. When Bitcoin falters, fear and caution dominate, making it harder for new projects to gain traction. Regulatory battles fought by Bitcoin set precedents for the whole industry. Pi's success depends on both its own execution and the overall health of the crypto market. A thriving Bitcoin paves the way for Pi and countless other digital assets. Pi Network faces major challenges ahead. The transition from enclosed to open mainnet is critical. Missteps could trigger a damaging sell-off. Building real utility is essential. Without it, Pi risks becoming just another speculative token. The team must overcome skepticism from its long development cycle by improving transparency and communication. Attracting developers and businesses to create a vibrant ecosystem is key. Regulatory hurdles remain, with compliance a moving target across jurisdictions. A single misstep could stall growth or invite sanctions. Success isn't guaranteed, but clearing these hurdles is vital for Pi's vision. The future holds both immense opportunity and the need for caution. Pi's greatest asset is its huge user base. If activated, it could become a leading peer-to-peer payment network. For the broader market, Bitcoin's mainstream adoption could unlock massive new capital and legitimacy. But optimism must be balanced with patience and prudence. Pi's open mainnet launch will bring volatility. Users must be prepared for a long journey. For Bitcoin, volatility is opportunity, but only for those with conviction and a long-term view. We're witnessing a financial revolution. Pi and Bitcoin are two sides of the same coin. Build, accumulate, and hold. The future belongs to those who see past the noise.